U.S. Market Update with Money FM 89.3.
Good morning, folks. Here's how markets are looking like right now as we come off the Thursday session. In the green again, so the S&P 500 and the Nasdaq Composite back to record highs as hope over easing inflation and gains in technology stocks helped Wall Street's midweek bounce. We've got the S&P 500 advancing 1% to 5,157. The tech-heavy Nasdaq climbing 1.5%, the upper performer to 16,273. The Dow Jones Industrial Average up 130 points or 0.3% to close at 38,791. So let's check in now with Michelle Schneider, Chief Strategist at Market Gauge Group. Michelle, thanks for joining us on the show again.
Well, thank you, and thank you for having me on International Women's Day. I appreciate that.
Yes, quite timely to have you on, Michelle. So let's talk about how you are reading the market now. Where is the money flowing to?
Well, clearly we're still seeing money flowing into some of the big winners like NVIDIA, but we have seen a good rotation this past week into some of the precious metals. Gold is on new all-time highs, not necessarily as talked about as the NASDAQ being on new all-time highs, but there is something to be said for that. Silver has been rallying as well. Copper actually starting to pick up a little bit. So it seems that with the dollar softening and with a lot of the technology stocks and other areas that have been brought up, like home builders, et cetera, being slightly overvalued or at least very expensive, we're starting to see people come into commodities because the fear of inflation, even though we haven't exactly seen it come to fruition yet, is definitely in the back of people's minds.
Yeah, talking about risk in the economy, what are junk bonds telling you right now about the market?
Well, I'm so glad you asked about that because people are trying to pick a top, and that's just human nature to try to pick tops, try to pick bottoms, and we know that anybody who tried to pick a top in this market since October has really gotten into big trouble. So that's why I like to watch a couple of key instruments that will really give us, I believe, the clue of when maybe not the top, but at least we start to see some sizable correction. And junk bonds, they are bonds that traders trade when there's a risk-on environment because they're junk companies, basically. And because they're junk companies and they don't have good balance sheets, they pay a very high yield. So you're going to buy junk companies when there's risk on and when everybody's happy, and that's been happening, obviously. It hasn't done as nearly as well as the rest of the market, but it's held up very well and has recently made 52-week highs. So here's the thing. If we start to see those bond traders, and you don't even have to be a bond expert, you just have to watch HYG is my favorite symbol. If that starts to roll down and you start to see selling coming in, then what it tells you is they're giving up on buying these junky companies because they're starting to have some fear. And that will eventually, I think, have a trickle effect into the market itself.
All right, watch out for how junk bonds are moving as a bit of an indicator of the level of risk in the markets. You're also watching a couple of things to see how inflation could play out. And of course, we've seen some signs of it moderating. So what else are we going to be putting on the radar here as we head towards the rest of the year?
Well, okay, so this is what happens is once you have one domino fall, others fall. So let's say in the scenario that we do see junk bonds start to sell off and we do see the market come off, and it could be for a variety of reasons, but let's say that what that does is it gives the Fed impetus to do what they're saying now, which is to start cutting rates in June. At a time where they didn't get to their inflation target. And, of course, we do know that there are still some inherent problems with inflation, geopolitics, weather, supply chain, government spending, government debt, et cetera. So, essentially, how do we know if inflation is coming back? Again, I like to look at leading indicators, not lagging ones. So silver has gone up, but it's still well underperforming gold. If silver starts to outperform gold, that's inflationary. If we look at oil, it's really been struggling to get over $80 a barrel. If it can take out $80, $85 a barrel, that too can be inflationary. The dollar, which has just sold off in the last couple of days, into support. But if we start to see some kind of massive drop in the dollar, also inflationary. And my last thing, which people don't ever think about, is sugar. Sugar futures have quadrupled since 2020. They've come off from their highs, but they're holding steady with some real fundamental concerns, shortages, what have you. India's second largest producer, not exporting, and it's a staple that's in everything. So if that got more expensive, that's going to drive food prices up and possibly, obviously, get people very uneasy. So those four things, I think, are what you really need to focus on. And if those things come to play, well, then we have a different market.
Yeah, I like that point about sugar because you don't really think too much about it, but it is everywhere. And same for silver. We've seen gold prices hit record highs. So if it does really outperform gold, you know something's going on here. Now, you also have your eye on what's playing out between the US and China. So tensions, of course, have been par for the course for quite some time. But there is a play here for investors, which is to look at how you can tap on opportunities in solar energy.
Well, yes, I actually saw a video recently in China about the massive amount of the massive amount of work they're doing right now in terms of solar energy and wind energy, by the way. I mean, China is just so well ahead of the curve in being able to eventually put the entire country on some kind of an alternative energy. And so at this point, we're not necessarily, doing well in terms of trading with China, but what it could force us to do is try to keep up here in the United States to some degree. And I know there's been efforts at that, but politically it's not been very popular. So therefore, what I'm looking at now is, does that switch? Does it become like another trade war type of situation where the money we put into our own infrastructure starts to actually increase and we start to see some more revenues in solar? So far, it's been sort of unpopular after its initial debut, if you will, but it could come back.
Okay, talk about things going up. We've seen Bitcoin prices hit record highs. So what is the play here? Is there momentum to keep riding this?
Well, again, this is another great question because Bitcoin has been, it's just been incredible. And not just Bitcoin, Ethereum, Solana, even some of the altcoins, the meme coins have done very well. They're much more volatile. So we have some real, obviously, traction from what happened with the spot ETFs, and now there's talk about a spot ETF for Ethereum, maybe even for Solana at some point. This mass adoption and the record inflow of volume has just been stupendous. So Bitcoin it tested 69,000, which was the prior high. We got up to back today to 67,000. If we get through this 69,000, I think you might see more people pile in, and that's kind of what you would have to wait for at this point. And if it's got any kind of dip, it would be great to see a dip to 53,000. That would be a big buy opportunity. But right now, the bias is positive, and that's ahead of next month's halving, which basically takes supply out of Bitcoin, which also makes it more favorable.
Yeah, I've got a few supporting factors to lift prices theoretically for Bitcoin, so one to watch out for. And another stock we've been watching is Microsoft, one of the big tech names. How much of that exposure or the optimism around Microsoft from you is how you've got Microsoft apparently building a lead when it comes to AI, because not too long ago you had Google having to hit the pause button when it comes to its Gemini image generator, which was creating historically inaccurate pictures. Now you've got a lot of talk about how Google CEO Sundar Pichai needs to step down or even be fired. So you've got a lot happening here on this front.
Yes, and if you look at some of, obviously, the other tech stocks, Microsoft has underperformed. And then even their new software, Copilot, which I am a huge fan of, by the way. It's amazing what that app will do for you. You can't even imagine all the things that it can do. It's a learning curve. But going back to the actual company, there's been some controversy on that because it's given some odd feedback, and that has hit the news, along with what you said. So it's basing the stock itself. I'm very intrigued when a stock like that is in a range, a trading range. So like between 395 and 420, Microsoft has been trading now for a long enough time to pay attention. So to me, if it broke out of 420, it means that it's gotten past all of the negative impacts that we've seen lately that has kept a lid on it. And if it breaks down under 395, then okay, it's not ready yet. But at some point, I would definitely be interested on any substantial dip to buy, and I wouldn't probably be too upset at even buying it over 420 on a new high because, it's Microsoft.
Yep, a lot of news around Microsoft to help lift prices these days. Well, we've been in conversation with Michelle Schneider. She is the Chief Strategist at Market Gauge Group. Michelle, once again, happy International Women's Day, and thank you for joining us on the show today.
Thank you so much for having me. You all have a great day.
Have a great day too, Michelle. Well, stay Money FM 89.3.
Before acting on the information on Money FM,